Um, hey, everybody, and welcome back to the crypto community. My name is Brad Hart. As always, I'm joined by JJ, and we have a very special guest today. His name is AJ Mihrzad. He's the founder of a couple companies. He's got Online Super Coach and Fit Fuel and a few different things. Yeah, he's doing a bunch of cool stuff. And I just want to preface this whole conversation. We're going to be talking about DeFi and yield farming with this is not financial advice. Do your own research. We're not making any recommendations here. We just want to share examples of what has been working for us in this new world of decentralized finance. So I'm going to be just kind of playing the part of asking questions, making sure everything's clear for everybody. Otherwise, I'll let AJ run the show because he's got some really cool stuff going on. And I'm here to learn too. So AJ, why don't you take it away? Give us a little bit of background and go right for it.
Yeah. First and foremost, grateful to be here. Been great friends with Brad for many years, and JJ been connecting with him because I'm a part of their incredible crypto NFT group, and I'm getting a ton of value in there. And I say, I want to add some value back. Little backstory with me. I actually been in the coaching industry for like 20 years. I started off as a personal trainer. And then around 2010, I started doing online fitness training. And then I saw the opportunity in helping personal trainers grow their online businesses. So I started a company called Online Super Coach, which helps personal trainers and coaches scale their online businesses. I did that in 2013. And it's been a great ride with that business. I took it pretty far. But I realized over the past year that my motivation was kind of waning because this new thing called crypto and DeFi was just really exciting and taking up a lot of my free time and energy. So in 2021, I got fairly obsessive about crypto, NFTs, and DeFi. I dabbled with it in 2017, but for some reason last year, I just was learning so much. New technology came out and a lot of new cool opportunities as well. So in April, I joined this crypto mastermind, and the mastermind itself really opened my mind to different possibilities. Met a lot of cool people, and actually made the decision to sell my Online Super Coach business. I went and found a broker. We put it in the marketplace. And over the past few months, I'd be happy to say that I actually sold the business, actually closed last week, and found a great buyer for it, worked out a phenomenal deal. Thank you. Thank you. So I got my intention of retiring from coaching for the time being and going full force in crypto. And this mastermind has been phenomenal for me in terms of learning new possibilities and also at the same time, understanding the world of DeFi. If you're not familiar with DeFi, I believe it's going to be the new global financial system. Right now, it's so early, but if you think about it, it's decentralized finance. Now, traditional finance is like banking, centralized, right? And there's a lot of rules. It's very slow. It's like a dinosaur system where decentralized, it's lightning fast. There's lower fees, the instant transactions. And most importantly, it's liquid. I think about back in the day when we wanted to put our money in a CD, you lock it up for like 5 years for like 2% interest, and you can't take it out. There's penalties. You make, pennies. Whereas now you could put your money in a yield farm, make 20% on the minimum, upwards of 100, 200% on really good ones. And at the same time, take it out in a heartbeat, So I know Brad has discussed his DeFi gains and some of the protocols. I've tested a multitude of them, and I came across one that works really well. It's actually based on one of the members in the mastermind. His name is Nick Peterson. And we all started off in the mastermind trading shit coins and trading NFTs. And it was a lot of fun. We made a lot of money, but it was very time consuming. We were behind the computer a lot, and it was big risks. You always had to be checking the charts. It dropped. If you didn't sell at the right time, you lost a lot of money. You would time it right and make a lot of money. But I find this to be a bit exhausting, and it made me a bit anxious. And then Nick Peterson introduced me to this decentralized finance protocol that he was working on. It's called the Wolf Den ecosystem. And this is more of a set it and forget it type of investment, where instead of watching the charts all day, you take your capital, you park it in one of these yield farms, and it essentially gains passive income for you. And the more money you put in, the more passive income you gain. And me being a conservative investor, I did all my research to make sure that it's safe. I'm not going to lose my money. It's not going to disappear overnight. I'm not going to get hacked. It's not going to get hacked. And at the same time, I diversified, not only investing in his DeFi farm, but many different DeFi farms, some very high risk, some more conservative. And for the most part, I've learned a lot of great lessons over the past year. I want to share one that worked remarkably well. It is a DeFi farm called Night Swap, and it's very safe, based on my research. But again, do your own research. It's not financial advice. I'll share what's working for me. And really, I want to show you a step-by-step process on setting up a simple farm to begin your yield farming journey, or if you already have some experience, to create consistent income. This particular yield farm I'm going to share with you guys is generating around $1,000 a day, some days 800, some days 1,200. And what I'm doing is taking the profits and reinvesting it back into the farm. Of course, I have a decent amount of capital locked in there. I didn't start off putting a lot in. I put a little bit in, added more and added more, made sure that I wasn't losing money. It kept on going up in profit. And the more you add, the more you make. There's another friend of mine who's in the same ecosystem. He's very public with this. He actually posted a video about this on his Facebook. He has about $500,000 in his Wolf Den ecosystem, and he's yielding about $15,000 a day in profit. He's been doing this consistently for a good amount of time. So again, the main purpose here is not to sell you anything, not to advise you financially, just kind of show you some new possibilities, new ways of earning income. I started off as a personal trainer. I worked many different jobs. I worked my entire life. And it was always this time for money way of earning a living. And this new world of DeFi and crypto taught me that there's different ways of manipulating finances to work in your favor. I also not only invest in crypto, real estate, stocks, and I have, a whole retirement fund. So obviously I recommend diversifying, but more and more day by day, I'm putting more of my capital into crypto, especially DeFi. And I want to just walk you through a process, but Brad, before I do you have any questions?
I just have a couple questions. So the thing I love about DeFi is how transparent it is, right? Anybody can look up these contracts. They can read the blockchain. If they understand how to code, they can look at the code. They can understand how this all works. So a few of the questions that I think come to mind is like, how are people getting these types of returns, and is it sustainable? So like, what are the mechanisms by which they drive the revenue that's given to the stakers in this instance?
Absolutely. I love the transparency. Like Brad said, everything's on the blockchain. And, I feel this, I'm sure Brad feels this, and majority of people feel that eventually the entire world is going to be on a decentralized platform, just because we see the fiat system, the dollar, inflation, money's being printed at a mad pace. And people are not secure with, the dollar or the fiat currency. So more and more people are going to take their finances in their own hands and go the decentralized route. I'm doing this right now, and I think we're still very early. And I advise you, again, diversify, dabble in a little bit, put a little bit of money in, see how it grows, watch it, add more in, and do it at your own discretion. But also know that in the next 5 to 10 years, this is going to be a global system because it's inevitable. I truly feel that decentralization is going to disrupt every industry, not just finance, but social media. You think about Facebook, you have Mark Zuckerberg, and Twitter, you had Dorsey before he retired. You have these centralized social medias. There's an authoritarian who makes the rules. They censor this information. This is allowed. That's not fair. That's not cool. A lot of people are against that. I'm against any type of censorship, any type of central authority that makes the rules. You could do this, you can't do that. The future of social media is going to be decentralized, where perhaps 1 billion people are going to vote on all the rules and what is allowed and what's filtered. And it's going to be a really cool place to be, and just about every industry is going to be affected by this. And I think the cool thing that now we can get into the financial aspect of it and really understand the blockchain in a very fundamental way is going to give us a sneak peek into the future. So before I share my screen and jump into anything, any other things you want to add, Brad?
Yeah. So I just really I like to get clear. Like, so I know there's a lot of platforms that will yield like, let's say 8, 10% a year on stable coins, right? They're pretty straightforward the way they do it, right? They lend out the
Yes.
money for a higher percentage. They share those rewards with you. It's just like a regular bank. You put the money in, they lend it out at a higher rate with leverage typically, and that's how you get your return. And they're giving you a very small return, whereas DeFi, it's more like a startup bank, is giving you a much larger
Yes.
return. So when I see these larger gains, 15, 20, 50, whatever, 100%, some of these are getting like 80,000%. It's either because of one of two things. They're either doing something that's unstable with algorithmic trading, where they're like lending at super high interest rates, or they're doing some sort of collateralized lending, or they're using a ton of leverage, or maybe they're printing a ton of coins, right? That's what really makes me nervous is they're just printing whatever currency. So they're giving you rewards, but over time, those rewards are worth less and less and less because it's an endlessly inflationary currency. So I'll give an example of like the Meyer DEX. And I actually like eGold. I like the team. I like what they're doing, but like they have the Elrond token, which is, there'll only ever be 31 or 32 million of them. And then they have this MEX token, which is like they're printing endlessly, right? And so there's eventually going to go, the value's got to go down, right? If there's no additional utility, there's no burn mechanism, there's no way to decrease the supply, it eventually has to lower the price per the utility, and the market will decide what that is. So when I see these platforms, like my number one question is, where does the money come from? Because if you can't answer that question, like, why am I putting my money into it? All right. If I don't understand the model, that's like, dummy check just to make sure I understand the model. And maybe there is a legitimate way they're making the money, but I need to know what it is, or I can't put my money in there, or at least not a lot of it. So that's really always my first question.
Great. Yeah, no, absolutely. And I'll admit, Brad, you're far more intelligent than me in finances and understanding these systems. Me, I just look at it just from, a layman in a lot of ways. I say, all right, I'm going to test out a little bit of money, see how it's growing, add more, just have a basic understanding of it, enough not to get screwed over, and of course, the number one rule in any type of investing is not to lose money. Thankfully, I've not lost any significant amount of money in these protocols. And also at the same time, what I'll do is I'll share with you guys some of the resources where you could do your own research. I don't know the exact mathematics of these protocols. I just know that it prints money for me, and it's a phenomenal investment.
Yeah.
This mastermind that I'm in, it's a high level mastermind. It's a $50,000 investment. So the people in there, they're very sharp. They're very wise, very given. And as you know, a lot of times when you invest in these high level masterminds, you get very quality people. And this gentleman, Nick Peterson, he created this entire DEX on his own, literally over the past 8 to 9 months. So he's very transparent as well. He has his own Discord, and you could pretty much ask him any questions in regards to it. Again, I'm just a member in it. I'm not affiliated in any type of way financially. Whether you join it or not doesn't matter to me. But I want to share my wins and my progress with you. And of course, before you invest, I'll give you some great reading material about the Wolf Den. I'll give the link to the Discord. I highly advise you to ask as much questions as you want there. It's a very transparent group. And like Brad said, he wants to know the inner workings of it. He'll explain to you the inner workings of it, the mathematics behind how you make money, the risks, so on and so forth. I'm just an investor that found a great investment tool I want to share with you.
Yeah.
I have,
so let's dive into that, and I'll continue to ask more questions. So my understanding of the Wolf Den is I was introduced to it by Grant. I went and I read some of their Medium articles. It's probably one of the things you're going to recommend to look at. And I actually burned some Wolfies, which is what they recommend you do to get into the group. They have this this token that you buy and you burn it, and that's how you prove that, okay, you understand enough to at least come and play, right? And then I got in and I was assigned a role, and then I never looked at it again. And then AJ is like, oh, I've been doing Wolf Den. It's been working out really well for me. I'm like, cool. So that, I guess my next level of understanding is for me to go in and start asking the tougher questions. Maybe I can even get Nick to come on and do an interview if he's open to it. I don't know if he is or not.
I'm sure he will. Yeah, absolutely. Yeah. Again, Nick's a much high level guy. He won't get into the tactical stuff like I'm doing right now, but for those deep questions, he's a guy to ask.
Sure.
And just like you, you initially joined the Wolf Den Mastermind by reading this article that kind of gives you this little homework assignment to do, where you buy these Wolfie coins and then you burn them. And then as you go deeper into it, there's other ways of advancing the levels. I actually advanced to one of the highest levels in there, the Guardian level. And we get new investments, new farms, just pretty much direct access to Nick, in terms of like, what direction they're going with the ecosystem. And, as far as I've experienced and as far as I've been there and all the members, it's very stable. It's very legitimate. There's no sneaky stuff going on. But let's just start with creating a farm 101 in the Wolf Den ecosystem. And essentially, as you learn how to create in this ecosystem, you could create it in just about any ecosystem. I know being inside the group, you guys had some great training on how to develop a MetaMask wallet. You have some basic security, understanding a hard wallet. I think you guys discussed Ledger and Trezor. So I'm not going to get into all of that. I highly advise you have security first and foremost as a foundation, hard wallet, MetaMask. I recommend some type of antivirus software. I personally use Bitdefender. It's a cheap yearly cost and it keeps you nice and protected. Once you have the protection dialed in, I know Brad and JJ recommend Brave browser. I'm going to jump into that right now and just kind of take you through my process. So if I could just share the screen really quickly.
Do you have access? I should be able to give it to you if not. I think you should.
Okay.
You should be able to.
I got access.
Okay, great.
Let me open my Brave. So let's get into the how-to, the fun part, okay? So we're going to walk through utilizing Night Swap Finance, okay? So this is
Not seeing
the
your screen
main
just yet.
DEX that we're doing.
There we go. Perfect.
Everything on over here, okay? So Night Swap Finance, this is the main place where we have the farms and the exchanges. If you're familiar with a lot of these exchanges like PancakeSwap, Uniswap, they all work in a very similar way. You connect your wallet onto it. You have the ability of trading specific cryptos, using farms, adding liquidity. We'll just walk through a step-by-step process on, first and foremost, getting set up, having the right currency for the DEX, and then developing your initial farm. So, of course, I recommend you guys always use a VPN. I'm going to just jump into that right now to basically start mine. The great thing about Bitdefender, it comes with its own VPN. Let me turn this baby on. Okay, and I'll connect my wallet.
Probably won't show pop-ups depending on, oh, no, it will. Okay, cool. So we'll blur a lot of this out only because we want to protect AJ's security and privacy.
I appreciate
the basic ideas. Yeah, absolutely.
So, of course, the main recommendation is keep very little in your wallet. So this is pretty much wallet that I use for this farm. And you want to use the Binance Smart Chain, okay? So right now I'm on the Ethereum network. I'm going to switch over to the Binance. And if you don't have the Binance Smart Chain on your MetaMask, you just simply go to Google and write Binance to MetaMask connection. And then the Binance website has an actual step-by-step process. You copy and paste the Binance Smart Chain, you add it on, and then you could trade on here, okay? So here we mainly use BNB, okay? BNB is the Binance Smart Chain coin. And what you want to do is have enough BNB in your wallet to get started. Now, what I do, a very simple process, is I have Ethereum in my wallet. You could get Ethereum, of course, from any exchange. You send that to your wallet first. And then I use this website here, which is changenow.io. Now, what I like about Change Now, it's a simple exchange. You don't have to log in. The fees are fairly low. It's very quick. So let's say I want to connect my Ethereum wallet. I want to exchange one Ethereum for BNB. So there's two BNBs. You want to pick the black one, BNB, Binance Smart Chain. Essentially, one Ethereum currently is 6.7 BNB. Okay, so you simply click exchange over here, and it takes you to this page. And it's a fairly straightforward process where you connect your wallet, It takes 1 Ethereum from your wallet, and then it puts 6.7 BNB in there. Okay. Once you have that exchange, you have BNB in your wallet, you lock your wallet, get out of here, you come here. Okay. So I'm going to connect my wallet because you get off the browser, it disconnects it. And I have a little bit of BNB to play with. But most importantly, I'm going to show you how this system works. Okay. Acting a little weird. Again, I'm not the most technically savvy person, but I know sometimes you got to refresh the website. Okay, there you go. Okay, so right here is the front page of NightSwap. It says farms and staking. So I come in here every single day and I harvest my money because I have a certain amount staked in these farms. And over here, it shows how much money I've made today so far. Okay, so this is $577.33. And the currency for the NightSwap finance is actually called Night. Right here, you always get the price of Night. It's about $0.50, so 50 cents. So if I have 1,145 Night, $577. Okay.
So what's the guard token? Is that part of this too, or is that something separate?
Yes. So kind of give you a little backstory. When Nick started the Wolf Den ecosystem, he originally started with the Wolfies. That was the first crypto, the Wolf Pup. After the Wolf Pup, he created Guard, which is kind of like the main treasury asset. You know, it's the more stable crypto.
Is that inflationary, deflationary? Is there a certain maxed out supply? How does that work? Or do you know?
From what I understand, there's a supply like you know, kind of like Bitcoin in a sense, where they're not constantly printing it out.
It's a fixed supply. There's like a certain amount.
Yes, fixed supply. Yes.
Okay, got it.
It's very stable, and there's a specific guard pool in which he recommends you have majority of your wealth in. It's called the base case, and the base case is essentially Guard and BUSD. So that specific pair yields about 70% APY, and it's a very stable 70%. So most of us in the mastermind have about 80% of our capital in there. And then we have these farms that are generating little profits every single day. And we're essentially just reinvesting the profits back. But for the sake of speed and the sake of just simplicity, I'm going to show you how to set up a simple Night farm. Okay, so on NightSwap, again, Night is the main currency, and your farm is essentially producing more Night. Okay, so let's say you have BNB in your wallet. Okay, you then want to bring it to the exchange. I'll just kind of give you an overview, and then I'll lead you to the articles that literally have the step-by-step process. Okay, so what we want to do is create a liquidity pair with Night and BNB. Okay, so let's say, for example, you have BNB in your wallet, 1 BNB. You then go into the Night.
I think that's the swap, not the liquidity. The liquidity is the middle one.
Yes. But the thing is, if someone doesn't have Night, they want to trade their BNB for Night, right?
Totally. Yeah.
So let's say you just put, you know, right now I don't have any BNB in here, but okay. So 1 BNB is 943 Night. Okay. So that's a good place to start. 1 BNB currently is about $450, and you're getting the same amount, $450 worth of Night. You then do an exchange. And then once you have 1 BNB and 943 Night, you then go into the liquidity. You add liquidity. Okay. So you would do the same exact thing. 1 BNB at the top, and then a 943 Night. You hit supply, and then you supply the liquidity, and then you create a liquidity pair of night and BNB. So maybe Brad could explain better what a liquidity pair is.
Sure. So liquidity pools are essentially a decentralized order book in a way. So when you think about a regular stock exchange or any kind of exchange, there's buyers and sellers, right? And there's people called market makers or specialists that will take either side of the trade, and they do this by creating a spread. So they say, all right, if something's worth 25 bucks, I'll buy it at 24 and change, and I'll sell it at 25 and change. And by making both sides of the market, they make a spread. In this instance, you're setting up your liquidity pool as a bunch of people putting in equal amounts of each token. And then they have an automatic market maker that fills that role and takes a fee for doing so. And then that fee is shared with all the distributants of the pool. So if you own a large part of the pool, you're going to get more of those trading fees. If you own a smaller percentage of the pool, you're going to get less of those trading fees. So it comes down to how liquid is the token, how much competition is there for liquidity, how much liquidity you're providing versus the whole, how many fees are charged, and so forth. But that basically gets all split up with the people who provide liquidity. So that's one of the ways you can generate income, which is relatively stable, because there's people that want in, there's people that want out. And by adding liquidity, you can make a spread. I'm also looking into a way where you can find pools that are misbalanced. So like, let's say there's been a run on BNB or a run on night, and there's less of one or the other. You can make up that difference, which is usually a large amount of capital you have to put in, but they'll pay you a much higher fee for doing so. So that's something I'm not entirely acquainted with, but I understand that that's possible as well. I hope that answers the question.
Yeah, that's a great way of explaining it. You create an LP of BNB and night, and then once you create that, it goes into your wallet. And then once you have that, you can bring it to the farm section. Okay. So this is the cool part where you pick which farm you want to invest your capital into. Okay. So I would recommend the night BNB. If you already have BNB in your wallet, you pair with night. And then once you have the LP, you deposit it here in this middle one. Okay. So as you can see here, it is an APR 268%. Okay. Now this will break down how that works daily, yearly, in terms of the actual percentage gain. Of course, with any type of farm, the longer you have your funds in, the more beneficial you get. Closer to the end of the year, you get a bulk of the percentage of APY. If you only have it for a short amount of time, you don't really get all the benefits. So this kind of breaks down the time frame, the ROI, and essentially how much a night you're going to get back. So again, night is the main currency. And here I have my night in BNB staked, and it's currently earning night every second. You could see it going up higher and higher and higher. Again, my farms are earning anywhere from 800 to 1200 daily. The more you have, the faster the night accumulates. And the great thing about night is you could utilize it in a multitude of different ways. You could trade it back for Bitcoin or Ethereum or USD, cash out if you please, or do what I do. You could harvest it, put it back into your wallet, and reinvest it back into the pool. Okay. Here's another pool. It's very similar. Night BUSD. I don't have, as much in there. It's still accumulating slow, but of course the APY is very high, 242%. And again, this kind of breaks down the 1 day, 7 day, 30 day, 1 year. And essentially the price of nights and the price of BNB goes up and down. Okay. Right now it's probably one of the lowest night has ever been. You could always look it up on Coin Market Cap. It's about 50 cents. It's gone as high as $1. I believe it's going to go up to a few dollars over time as more people utilize night and get into this farm. So it's a good time to get in. Of course, BNB is very low right now too. It's about $450, give or take. It's gone as high as $600. So if you're getting in at a time like this where night and BNB are low, you have a great benefit because, you're still going to get the high APR, but as the price of Night and BNB goes up, you also profit from, the token as well increasing.
Okay, so let's break those down a little bit. I'm going to share my screen just for a second and bring up all these coin market caps because we have all this as well.
Sure.
And just kind of talk about this through the prices. So we have Night Swap here. This hasn't been around all that long. I only have data going back to December. Do you know when it launched exactly?
I don't know the exact date. No.
Okay, cool. So this only has data back about 3 months. So it's coming online about 12/9. It's
definitely longer than December. Yeah.
Yeah. So maybe that was when they started tracking it. I see that the market cap is not verified, but they say it's about 7 million out of a fully diluted cap of about 500 million. So essentially what is on the market right now is a very small fraction of what will be on the market when all the coins in the contract are available to the public, which is essentially what they're doing. They're printing more of these coins all the time to reward these stakeholders for holding money. So you're putting real, BNB in this case, or a real asset that has a bigger market cap into play to stake liquidity in their token pool so that in exchange you can get more tokens, which are in ever increasing supply. So if you look at what happened to Wonderland, where they had, a whole bunch of people coming in with an 80,000% APY or whatever the heck it is, you can see that, it went up for a while. This is over the last 3 months. So you saw it go up from like 1,000 all the way up to 8,000, 9,000 up at the high, and then crashing, and now it hasn't recovered. It's been down about 2,000. So if you were coming in around here, you would have lost like 75, 80% of your money and you still haven't recovered it. Regardless.
That's where I was actually. So.
Regardless of where there's at, because there's no cap, there's no hard cap on this particular asset. So they're giving you, they're taking from you more stable, more utilitarian asset like BNB is used to pay trading fees. There's utility to it. It's got a big market cap. We can see it over here. BNB actually trades and has utility, and it's backed by one of the biggest exchanges in the world, which is Binance. You can see it's been all over the map, but all time it's gone up to as high as 675. That's about as high as it's gone. And now it's around 450. So they're taking that from you in exchange for these Night tokens and liquidity thereof and some trading, trading fees as well. So essentially you're getting a piece of the trading fees by adding liquidity. You're taking the farm tokens by locking up the farm tokens. They're giving you more Night tokens as a result of that, but they're endlessly printing these things. So it's going to drive down the value over time is basically how the economics are going to have to work. I mean, unless there's some other thing that I'm missing, I would love to get a counterpoint from the creators that they have some other thing that's happening, or, there's a lot of fuzziness. And there's a lot of folks like yourself, high net worth individual, want to put your money somewhere, want to get great yield. You're cautious and you're smart, but you've only seen a short time frame. Right? You haven't been through all the cycles that are possible, and you're still relatively early. So you're basically betting on the idea that I'm going to accumulate enough tokens before everybody else gets in and blows this thing up to $100 million, $200 million market cap. And in that case, you're right. But it's the same thing as getting in on a Ponzi scheme early. The people in Bernie Madoff's hedge fund made a ton of money for 20 years and then all got wiped out in one fell swoop. So the same type of thing can happen here, just in a more transparent way. Like we kind of know the economics aren't that great for the people getting in late. Right? We kind of know that if you get in at the wrong time, you could lose 90% or 100% of your investment. But if you're in early enough, you're probably, gambling on that you're going to be okay. But it's not a stable, consistent return. It's basically just printing more tokens, which anybody can do. And the amount of market share that a single token can capture is going to be less and less and less. We've seen this in the NFT markets. We've seen this in any market where there's like no barrier to entry. Anybody can create anything, and they see people making money and they just all pile in. And then there's so many projects like fighting for the same coins. There's only so much money to go around. Eventually it all crashes, right? And you have very few that make it. Everybody will talk about that story. And then they don't talk about the 10,000 that failed because nobody cares. And they just they're all licking their wounds. So I would love to dive more into this and like play around with it myself, because I too am okay with putting small amounts of money to work to put to pick up some nickels in front of the steamroller, hoping I don't get steamrolled. But the reality is somebody somewhere, this money has to come from somewhere. Somebody's getting steamrolled somewhere. So this is a speculative investment at best. Would you agree with that assessment?
Yeah, of course. Again, like I understand, a small percentage of the science and mathematics behind it. It would be great if you got Nick on here.
I'd love to talk to Nick. Yeah, if you can ping him and just be like, because I want to be fair too. Like if there's something I'm missing here, cool. Like educate me. I want to learn. because
Absolutely.
if there's a way to make this sustainable, like maybe I'll use that in a project someday, like I want to
Yes.
find the best practices. But what I'm seeing so far is a lot of these, like it's either a DeFi platform where they print endless tokens. That's very common. Or it's a trading platform where you get fees, but those don't pay as well. Or it's like a very stable coin portfolio where they're lending out money to traders who want, to speculate, and they're getting a consistent return on that. And they split that with you. That's all fine. Those are all decent business models that work. But you don't see these crazy gains without some fuckery of some sort, right? And that's essentially
Yeah.
what I'm trying
Yeah.
to snuff out, because think about a real business. Like what kind of real business returns 500% to their investors, like without
Yeah.
sales and like data to back that up. It's very few businesses that can do that. And if you didn't see the sales to back it up, you'd be asking questions.
No, yeah, 100%. Of course, these APRs are not sustainable long term, without a doubt. And the one thing I will go for is obviously being in this mastermind. Hundreds of people that are in this mastermind utilizing this farm. There are various amounts in there. Again, we just kind of base it on diversifying in various farms. NightSwap, in my personal opinion, is one of my best ones. I'm also in Time Wonderland and other ones as well.
And if you could be early to those, you did great,
Yeah.
right?
Yeah.
It's just how early are you and how much risk are you willing to take on by being late if you are late?
Yes. Yes.
Because
Yes.
then, the late one, that's where all the liquidity comes from to get the early guys out. So you might have hundreds of guys in there. You got a small little pool, relative to the whole market. And if like 2 or 3 of the whales start pulling out, it's going to create a run. And if you get left caught holding the bag, then that's going to be rough, because ultimately it's your money that's paying their exit.
And that's one of the key things. You're right. Just being early, like for example, being this wolf den, we have access to like pre-sales, so we get these coins early, right when they're minted. And at the same time, you are supplying liquidity to the farm, and it's 1,000, 12% APY, for short amounts of time.
Sure.
You're accumulating a lot of coin, but then obviously that dips down lower and lower as more capital comes in. And, I just don't see this whole, NightSwap project being kind of a fly by night scam of any type.
I don't think it's a scam necessarily. I just don't know that the economics are sustainable. That's all I'm trying to say. And by the way, this same shit happens in public markets all the time. Like the people who are early into Tesla or Uber or whatever, they're all selling to the IPO people who pay way too much and get crashed. Their investment crashes 50% out of the gate because it was way too high to begin with. And there's so much hype built up at that point that anybody who's buying is basically an idiot at that point, but they got in for like 100th of what that thing was, or 1,000th of what it was.
Absolutely. And the whole thing is that, again, the main premise of this whole wolf den ecosystem is you have these farms, right? That are, you're putting in money and exchanging in different farms, generating the specific token, cashing out or reinvesting back in. But the main purpose of it is this thing called the base case, where it's based on Guard and BUSD. And Nick could explain this a lot better, but his main objective is to never have that APY drop below 70%. It's like a treasury of sorts.
And that's per year, right?
I'm sorry?
That's per year, 70%?
70% per year.
Yeah, you might be able to make 70% sustainably by just lending in crypto, because people are willing to pay a lot to get capital to do their trades, right? So that's a reasonable thing. I just want to know for sure what he's doing with it. I'd be curious to look at that. JJ, can we look at the contracts and get some background on some of this stuff?
Yes. Explain to me how I can show you the contract. So,
oh yeah, sure. So each one of these tokens, if you look on, let's say, Bscan, whatever the one that I think it's on Binance chain, right? So let me teach you something real quick. Let me show you how to do it.
Great.
So this is actually really fun. If we go to here and we look at the Binance Smart Chain, we're going to copy the address. Then we're going to go over to the actual Binance blockchain explorer. There we go. And then we're going to take it over here. We're going to look it up. We're going to do that. JJ, you available? Sorry, I was saying JJ, and you might have thought I said AJ.
Yeah, I'm here.
Yeah, cool. So if we go over the contract here, we can see, okay, this is the NightSwap token. Now we can go and look at the contract, and we can actually read through this and see what this contract says. So JJ, would you be willing to just kind of give us some sense of this? It looks pretty straightforward so far. Just a lot of Solidity, basic stuff, Zeppelin and stuff like that. Let's take a look. So you can look through this and actually see.
I'm not seeing any red flags yet.
You scrolling through on your side?
Wow.
I'm actually following you.
Yeah, this is all pretty basic stuff, but this doesn't like
Wait,
strike
stop
me as
right
anything.
Scroll down a little. Right there.
Because the cool thing about this space is everything's there, right? In order to commit a contract to the blockchain, every line of code has to be publicly accessible and anybody can read it. The problem is nobody reads these things. So like I try to keep people around who are way smarter than me. You can like look through these contracts and be like, okay, this is all basic or nothing new here, or this is weird. We should look into this more, or that's new. And actually, you know, utility, like the whole point of this group and what I'm trying to do is find the best practices. Like what is actually cool and unique and utility that, you know, we can build something on in the future, or what's just another Me Too that, you know, may grab some market share. Maybe if you get in early, you could get lucky and you know, you want to get out as soon as possible because it's going to get run into the ground. The other cool thing about the space is that anything that somebody does create that is unique out of their project is now available for anybody else to look at. Right. So we can all build on top of each other very quickly. Like it used to be in a Web 2 company, all the IP and algorithms and everything was like under lock and key and it's all considered proprietary. With this stuff, there's no way for it to be proprietary. It's literally all out in the open. So if you know what you're doing, you can really go faster.
As you and JJ were scanning this contract, what are you guys looking for? Like what red flags or anything?
Yeah. So we want to know how much of it, like a few things that I know, like, and again, I'm not the expert here. I don't consider myself a coder or anything like that, but the few things are like, how much of it is open source? And you start to notice like the same chunks of code again and again and again. How much of it is new? How much
it's standard. So I just went through it on my other end. It is a standard open source code. I mean, there's no security loopholes. It's the same code that most tokens on the smart chain will use. It looks like they actually got this code from the BNB Git website. So, you know, it's standard token code. There's nothing in here that's some of the things that I personally look for is there is a call to action for a deflator. What this does is that it's almost like a countdown on how long this contract is going to stay alive. And if anybody's looking to actually rug you, they'd put this deflator in there so they don't have to remember to turn this token off or delete this contract.
Wow.
Interesting. So basically they put in a day in the contract when everything's going to get rugged and you can find it.
Exactly. Pretty much.
Oh, wow. That's scary.
And you can literally read it in the contract. That's crazy.
Well, yeah. Cause if it exists, then it has to, right?
Yeah.
So if,
not just that, it's a smart contract. If the code is in there and that it exists, then they are legally not responsible for that coin going poof.
Interesting. Cause you know, their defense would be everybody could have read it and known that.
Yeah.
Exactly.
And it doesn't have to be in the contract for them to rug either. You can have somebody who owns a lot of these tokens that just decides, okay, I've let this run as long as I think it's going to run. It's starting to top out. I'm just going to sell everything I got. And they own like a quarter of the supply and it tanks overnight. So that can happen too. So you really got to be careful. Like to contrast that with LooksRare, which again, it's brand new. It's only been on for a few days. We're going to look at that in another video, probably next week. So we haven't done through that contract, but what I understand of it, just from a layman's perspective, is they did a launch. It was based on users on OpenSea. They gave tokens to everybody who was a big user on OpenSea, all the whales that trade a lot of NFTs, which makes a lot of sense because they're basically launching an OpenSea competitor. They gave you the ability to stake, and then if you stake, they split all the transaction fees with all the stakers. Now, here's the cool part is that their team is not incentivized at all by any of the trading fees. So they're charging 2% instead of 2.5% like OpenSea, and all that 2% goes directly to the stakers of Look. And if they want to earn anything, even if they have a big bag of it themselves, they have to stake as well, right? So they're incentivized along with all the investors and the community and everybody who's basically building with them to only get paid if the token performs well. And as a result of that, the chart that they've put together is pretty sexy. So I'll just share that real quick because I think it's interesting to look at. And it's only been a few days. Again, this is not a recommendation, but this seems to be a more sustainable model. This is the same thing with saying, hey, we're not going to take a paycheck at all from any of the proceeds of the company. We're only going to get paid in equity. And as you can see, the market's responding really well. This has already doubled in price. It's pretty stable. There's a lot of buys happening, a lot of sells too, but there's money flowing in, like this whole stream of funds here, which we can dig in a little bit more. But there's money flowing in that wasn't there just from people buying or getting the rewards. right? The worst thing that could happen on an airdrop is everybody just sells and goes away. And that's what happens to a lot of them. But with this one, they're sticking around. So it's interesting to watch versus, a staking platform where there might be legitimate stuff happening behind the scenes, but there's no revenue driven. There's no like business model necessarily. And they're just printing tokens until it doesn't work anymore. And yeah, you can make money on that, but you gotta be quick or you're dead, right? You're early, your liquidity. So again, I love digging into every one of these platforms. Literally any platform that somebody brings me, I'm going to dig in and look through its paces. And I'm like building a team to be able to spot all this crap. Like just, there's so many things that you can't look at everything, but I've seen a lot of this stuff before. A lot of it rhymes. So yeah, I don't think there's anything wrong, especially since this is pretty early with playing around a little bit, but it's got to be an amount of money to AJ's point where like you've got like 30 grand into it or whatever. Cause you're saying the guy at 500 grand, he's got like, 15K coming a day. You're getting like 1K a day. So that's a 15th. So let's call it 30 grand, whatever it is, doesn't matter.
I look at it as like, in 30 days,
sure. That's an amount of money, where if that went poof for you, it's so small an amount of your portfolio, it wouldn't matter, right? You would not be, it would suck. It would not be a good day, but you'd be okay. And the likelihood that's going to happen on 20 DeFi platforms simultaneously is pretty low, right? But if you put 30 grand into 20 different platforms and now you're cranking returns and you can kind of see some of them coming, you can see when some of them get toppy, maybe sell out a little bit, you can see when the crashes are coming. That gives you a little bit more diversification risk. And now you can still safely get a higher return than most people could, but it requires a lot of capital. It requires a lot of patience. It requires a lot of watching this stuff, and it can create anxiety if you're not careful. But understanding how these ecosystems work, I think, is the most important thing, because if not, you're just going to be liquidity for people who do understand them.
Yeah. So it's, sharing my example, of course, if someone has a small amount of capital, right? Let's just say the counter argument, $10,000, and they really want to just utilize it in some kind of DeFi protocol. Is there a specific one you recommend?
Yeah. So I like spreading it out, right? If you're going to take let's say I have a crypto portfolio and it's X amount of dollars and I'm going to split it up. I would be looking at like three main things. I would be looking at coins, maybe four main things. I would be looking at like coins, DeFi, gaming, and NFTs, because those are like the four biggest use cases right now. And then based on how bullish you think you are, given, the environment, I would split it accordingly. So like I'm most bullish on DeFi. I think DeFi is going to win, but I'm going to look at the more stable stuff. I don't really, maybe I'll put a small amount into some of the wackadoos just for fun more than anything else. And maybe it'll work out. But like the bulk of that money is going to be in like, traditional lending platforms, maybe with a little bit of leverage, nothing crazy.
Like an Anchor protocol.
Yeah, I'll put maybe some in Aave, some in Anchor, some into Celsius, some into Terra, and like stuff that's like paying a pretty solid rate, but they actually have a business model, right? They're lending the money out, you're getting a return for it, and I'm spreading it out, right? Then I would be looking at maybe some NFTs, with like a small amount. I'd be looking at some gaming coins when they're attractive, before they do major run-ups after the crash or whatever. I'd be looking at those, and then finally I'd be looking at things like, what did I say? Gaming, NFTs, crypto, and DeFi, or crypto coins. So like just owning parts of the ecosystem. Like I can own Ethereum, I can own AVAX, I can own Phantom, I can own Solana, I can own, Near or Terra, and you can just get exposure that way by just owning the coins that these ecosystems are built on. And that's been a good strategy overall, is just what are the platforms that are actually going to create the like similar to Amazon or Google or Apple, like they own a platform that people can create on. That's a great thesis. That's always worked really well. So it doesn't matter. You don't have to speculate too much on what people are building with the NFTs or the games or whatever that are built on these blockchains. You just own a piece of whatever happens. So you follow the money. Like we were on that great webinar with Ryan Alice from
Coinstack. It was phenomenal. Yes.
Phenomenal. And he's an institutional guy. I have a lot of respect for Ryan. I've known him for many years. But he thinks about it correctly, is like, I don't really care. Like, I don't really care what people build. I'm paying attention to how many devs, how much money, how much use, how much utility, and then I'm betting accordingly, right? And some are going to outperform others, but if you have a portfolio strategy, you get a little piece of all of them. If one works out really well and becomes 100x, you're set. Like I was in Ethereum at $8. That's been a huge win for me. Like
that's huge. Yeah.
Bitcoin at $100 is a huge win for me. Like just being in it, even with smaller amounts of money, you can do really well if you just have the ability to hold over the long term. And if you don't know how to hold, then just pick an amount you can invest every single month and just dollar cost average. And that's that, and just kind of forget about it when you're not looking at it, and you once a month you
Yeah.
go and you buy some crypto and you just chill. And the same goes for life insurance, real estate, and other assets too, because your cash above a certain amount has no utility. It's just losing value, and power. So
I'm on the same wavelength. Yeah, just I'm a big holder,
absolutely. And you're going to win some, you're going to lose some. Overall, you did the right things with your money. I don't think you're going to be in a bad shape, but I think it's really important to keep asking questions until you get an answer that satisfies you. And I'm endlessly curious as to like how this stuff works, so that when I look at new opportunities, I can quickly evaluate them based on the heuristics that I've created that allow me to make decisions quicker. And that's just what an algorithm is. I'm just doing it as a human, right? Give it a set of parameters. We look at a thing, and any new thing that we encounter, we can quickly decide how to sort it.
Absolutely.
Right on, man. So any other cool things you want to share with regard to DeFi and staking, other platforms you like that are promising, stuff that we're early on? Because like you said, being in that mastermind is probably paid for itself because you are early to stuff. That's massive. Being early to Neo Tokyo is my biggest win last year. And I wouldn't have learned about that if I wasn't paying attention. So, being in these groups has been a huge win for me personally. What other stuff are you seeing that's really exciting for you?
Yeah. But one thing that comes to mind is also a guard. I would love to look at the contract for that because that's far more stable. And with the whole base of this ecosystem is built on, that has been steadily increasing. I got into that fairly early again. It's majority of my portfolio is in Guardian.
Yeah, it looks like it's on a run right now. So that's cool.
Yeah.
If you were in here, you're definitely doing well now. Is this a similar setup where it's like you stake and you get guard in return?
Yeah, correct. This is a guard BUSD pair. That's majority of the people in the mastermind have it in there. That's a 70% APY.
So this might be a different setup. And the reason I say that is because of this chart. This chart speaks to me as like a bonding yield curve, something like that. Like this doesn't behave like a typical shitcoin would. Yeah. So I'm wondering what this is doing that other people are not. Because there's a DeFi crypto game called Abigache that behaves like this, where it's on a yield curve, and essentially the way it works. I'm not an expert on this stuff, but essentially the way it works is you can't buy or sell without some sort of burning mechanism, so the supply stays pretty steady, and that's how they keep the price from crashing. But there's some great stuff about it. But yeah, let's take a look and find this now. So now I'm going to go to this contract instead. Now we're on guard, and now we're going to look at the contract. I'm going to send this to JJ so he can take a look, and we'll go in real time and see if there's anything that's weird about it. And there it is. So this is again pretty new. It's been around since May. A lot of these are new though, so that's not necessarily a good or a bad thing. This whole space really just came out of nowhere. Last year or two. I always love to see the length first. I kind of get a sense of like how long this contract is. Most contracts are between 1,000 and 2,000 lines of code. This is about an average size. Okay, so that's interesting.
I see.
You got that, JJ?
I do, and I'm already seeing a couple things I'm worried about, so I'm checking something.
Okay, cool. Yeah, this is like operating in this space without people who know to read code is suicidal in my perspective. Like it just is. You don't know what the hell you're doing. Anybody can tell you a story. It doesn't mean anything. Tell me what's actually going on here.
Rudimentary way, money in, money out, but obviously there's
the biggest thing I'm looking at here is they're using unlicensed code. So they've used a Pragma licenser with an unlicensed key code inside of that Pragma code. What
line are you on? What lines are you on?
It's actually in the beginning.
Okay.
Like first red flag right away.
Pragma solidity. Yep. Got it.
Yeah. So they didn't license this contract with Pragma. So there's two types. You got open source, and then you have a non-open source code. Now this could have been a mistake with the developer itself. So they hired a developer who knew what they were doing, and they're using an unlicensed version of the SPDX. That's my first red flag. That's either laziness or there's something else in this contract, which means I'm going to scan it a little harder than I would just going over anything else. So, and don't get me wrong. I mean, it could just have been a lazy developer. but these are some of the things that cause loops and security holes inside contracts.
Right. So you're using something that hasn't been vetted and tested by the open source community over multiple iterations. If you bring something new to market, it could be the best thing since sliced bread, but the more likely scenario is it's full of holes, like Swiss cheese. Like nobody, there are very few developers out there that can nail 1,400 lines of code in one shot, and it's great. And it's like unimpeachable. It's like next to impossible that happens. Usually the way these things work is somebody commits something, a bunch of people beat it up, it goes out, it gets tested, it gets beat up a bunch more, people make additions and improvements to it, and it kind of grows over time. And then people use the stuff that's like very consistently been proven to be safe, and then they build off of that. Yeah, battle tested, exactly. Like recently, I forget the name of it, but there was some little thing that the companies were using that turned out to be had a hack in it, like that was 10 years old that nobody had ever caught. And then all of a sudden there was this 0-day event where they had to go and update all the software at these major Fortune 500 companies because they're like, oh crap, we've been using this and building on top of this forever. And now we realize there was a security hole in it.
It's crazy. Because
for as many people as there are out there trying to fix and patch holes and build good code, there's just as many people out there trying to hack this stuff. And they're just as smart and capable, but they have different intentions. Anything else you're seeing here, JJ?
So what I'm seeing is a lazy developer. I'm not seeing anything that, so AJ, nobody's going to come in and steal your guard unless they really know what they're doing, right?
Yeah.
But you see a lot of the commenting, they literally stole this contract from another contract and edited it for their needs. So when it was compiled, that's where we get it's an unlicensed code because it has to talk to the server. There's no license. The server's not going to certify it, but that's okay because the code's still going to run.
I see.
Other than that, I'm just seeing a lot of, just honestly sloppy code, which down the line, let's say guard becomes a big thing and they're still using the same contract. Somebody really smart can come in here and use their contract against them.
And how would that happen? Like, give us an example of how that could happen.
It was, where was I? So one of the things that really popped out on me was the hash code inside the contract. And that not only is the hash code, publicly visible where, there's lines of code that you can call a different contract to get that hash code.
Is that this one on line 300 you're talking about here?
Yes, it's right in there. There's the hash code. That can be used in, a bunch of different ways. There's also, if you go up, I think it was line 400 or 450, there was a line of code in there that had a broken algorithm. And I'm surprised that even this contract got verified. There is actually no security audit. Okay, that's another thing that is a red flag for me. If you're how much money they have, coming into this system, and they can't pay a red team to come in and audit this contract.
That's a big red flag in my
That's
opinion.
A huge red flag.
Like even brand new contracts that they commit where it's like, they just started, they don't have a ton of money under management yet. They're just getting rolling, but maybe like their team is really solid at stocks. They have other projects. Like their first priority is going to be to get somebody else to come in and audit what they've built.
Yeah.
Right. And that just makes sense, right?
Because why would a company not audit it?
Right. Like exactly. Like if you were doing your books at the end of the year and about to submit your Form 10K to the SEC, you're going to have an outside auditor come in and audit that thing. It's the law, right? Unfortunately, in crypto, it's not a law necessarily, but it's like generally good business practice to have somebody come in and audit your code.
Credibility.
Yeah, especially when people are going to be making investment decisions. So that for that reason, like that's kind of a again, there might be a way to explain this away, but like for our standards, that's a red flag. It just seems simple, right? And how much money is in this contract right now? If we wanted to look that up, we could look at the number of guard, right? Times, what is it trading at? So there's about $12 million in there. So I don't know about you, but if I had $12 million sitting somewhere, I'd make sure it's pretty secure. So that's just a couple of things. JJ, did you see anything else when you were looking through there?
No, it's just again more sloppy code, and it's
And
just
no audit.
open source. Yeah, and no audit. So they just took the code, they changed pretty much all they did from what I'm seeing, comparing to another open source contract, is they took somebody else's, BNB contract, pasted it for theirs, and changed the name and the hash code.
Well, and here's the other thing. Like, you just look at the copy. It doesn't really smack of sophistication. It's like getting wealthy, making FU money in crypto is much easier than people like, come on, this sounds like a fucking radio ad. This is awful, So it sounds like gobbledygook to me. Again, could be the best thing since sliced bread, but there's so many cults of personality out there.
Yeah.
Right? If you talk to people about Hex, half of them will say Richard Hart is like a scammer. He's the worst person that's ever lived. I used to work with him in Florida. He was looking for a way to escape the US in case it all went toes up. Like, half of them are going to say he's a piece of shit. Half of them are going to say he's the next god. Right. And the same thing is true of Steve Jobs. Half people hate him. Half people love him.
Michael Saylor. Yeah.
Yeah. It depends who you ask. Right. So you got to kind of take all of it with a grain of salt. But when you really dig in and like look away from the noise and just kind of like pay attention, what did you actually build here? What are we really looking at? Like, it's not some black box that nobody can see anymore. It's literally on the blockchain. Anybody can look at it. But do they? Most people don't. 99.9% of people don't. And it doesn't matter how sophisticated they are. It doesn't matter how successful they've been. It doesn't matter how much money they have. This is a human thing. We're all busy and nobody takes the time to really put these people through their paces. So I always wonder, like, who is just a lot of bluster and who is, or who's a really great marketer and who's really got the goods. And those are the people that are going to crush it. So sometimes when I see that there's a lot of value locked in the contract, I think it's a good thing because a lot of people have looked at it. And then sometimes I see not a lot of value locked in a contract. And one or two things is true, right? You're either so early or there's just no real money coming into it, like serious money, hundreds of millions or billions, because there's holes, right? And people look at it for 2 seconds and they realize, oh shit, this is maybe not where I want to put my money. So again, I won't tell you what to do one way or the other, and as long as you're spreading the risk around, cool. But always be taking money off the table, always be considering the downside risk, and pay attention to the obvious red flags, because if you have rose colored glasses on, all the red flags just look like flags.
True. 100%.
So that's all.
Excellent points.
Yeah. I just want to make sure nobody gets too hurt doing something that we could have avoided as a community, right? If we look at something, this is not to beat up AJ or anybody else. Like, this is shit that I look at all the time. Had I taken 5 more minutes,
I love the raw truth.
Yeah. Had I taken 5 more minutes and looked at some of these investments a little bit differently or with a more pessimistic view, I could have missed out on some really big losses last year. And I'm very transparent. Like, I made an investment into Anonymice at the wrong time and I got toasted on that. Not because it's a bad investment necessarily. It had a solid contract, solid developers, all on chain. There's a lot of benefits to it, but I was just in at the wrong time. So you can lose money that way, right? Yeah. There's other stuff that, like, I put a small amount of money in and I was early, but the developers were scammers and now it's like a whole other thing. So, that shit happens more than you think. And again, nobody talks about it because either you're not talking to the same people that got rugged, right? Because there's very small pockets of money, or you're talking to one person that loves it, one person that hates it, and you never get the right, kind of unbiased opinion. Or the more likely thing is just nobody's actually looking for themselves. And when you look for yourself and you kind of know what to look for and you start to see enough of these contracts, you start to see enough of these things get launched, you realize, oh, this is either another Me Too. That's fine, right? It's just they're competing with everybody else and they're not doing anything unique.
Yes.
Or there's laziness, there's sloppiness here, there's no audit, there's a bunch of red flags. That could be an option. Or the third option, which I'm looking for, is like they're doing something that's actually unique here. And oh shit, maybe I'm early enough where this could be the thing, right? Maybe I want to allocate more of my funds here. And it's all probabilities to me at this point. I don't give a shit because I can make money on bad things as much as I can make money on good things if I have the right timing.
True.
Right.
Yeah. And that's one of the things I'm going to look at personally when I'm looking at a company. I'm going to look at what they're doing and how they're doing it. Now, mind you, I might go into this contract and I go and look at their website and they got a great roadmap. They just hired a lazy developer. So I'm not judging Guard based on their contract.
I like their Medium articles. I thought it was well put together. I'm not judging any of this stuff. I think some of what they're doing is great and some of what they're doing leaves something to be desired. And I think at the end of the day, if you're going to put a lot of money into something, you got to really put it through its paces regardless, And And a lot of money is a different number for everybody. But if it's more than you want to lose overnight for some one of these major reasons, then you really got to do your due diligence.
Well said.
Okay. Cool. Any other platforms you want to talk about or go through? Because we've already done an hour, so I want to make sure.
No. I think this is great. I learned a lot, from your wisdom. JJ's wisdom is very insightful. Like obviously everyone that's watching, do your own research, and I recommend going to Wolf Den Crypto if you're wanting to look into this project to understand it better. And
ask the questions. Maybe you'll get better answers than I did. That's important.
Absolutely. The questions brought up here are phenomenal. And I'm going to speak to Nick about them, and I would love to get Nick on here with you guys, so you could directly answer. These
that would
are
be great
things to bring up.
And if he's got his act together, and I just don't see it, awesome. Like, I can't judge everything from just what I'm seeing, but if it's like, I'm gonna see through the bullshit pretty quick if it's not legit. You know what I mean? Like, whereas most people, they don't have the background to be able to do all these different things. Like, you got to understand finance, you got to understand trading, you got to understand markets, you got to understand economics, you got to understand economic theory, you got to understand code, you got to understand, like, there's a lot of pieces, and not everybody has those pieces. I don't have all the pieces. That's why I bring smart people in to help me.
Absolutely.
Anyway, that's that for now. I think we've done enough damage for one day.
Yeah.
AJ, I got nothing but love and respect for you, man. I really appreciate you taking your time today to show us some of the stuff you're looking at. Hopefully we've added value back in kind. Anybody who's watching, please leave comments below. Let us know what you think. If you're watching a replay, #replay. We're going to blur out anything that's personal, and we're going to get this up in the group. We're also going to be looking into Looks, which I think is a really promising new project, which just came out a few days ago. If you haven't gotten your Looks airdrop and you trade on OpenSea, you should check that out. Go to looksrare.org. Everybody I've talked to has looked at the contract, says it's safe. Again, I never am going to be the 100%, washing my hands of this whole thing. Do your own research, talk to your own smart people. The more smart people we have looking at this stuff, the better. The more smart people we have asking questions, the better. We're never going to catch everything. And there's new stuff coming up all the time that we don't know about, right? There's new stuff to learn all the time that we don't know about. So the more questions we ask, the smarter we can get. And when something new and unique does come along, we can identify it that much faster and get heavier in that, because it's actually new and exciting versus, the swaths of other crap that's just being pumped out by everybody else. Anyway, let's end there. Thank you, AJ. And it was lovely to have you, and we'll talk to you soon.
Likewise. See you guys.